Number 5 of my 7 modern methods of investing. I call it the permanent portfolio method. Okay, and I call it that because I was recommended this book way back when called Fail Safe Investing by this guy, Harry Brown. Maybe you can see it on the screen here. Harry Brown had this concept that you shouldn't be bopping around buying this, buying that, taking too much risk on individual stocks. You really should have what's called like what I think might otherwise be called an all-weather portfolio. So a portfolio that you can just is simple and you rebalance it once per year. It mitigates risk while or preserves capital, you might as another way to say that, while producing a reasonable return, maybe of the 6 to 8%, compound annual growth. And he wrote this book, I think, in the 70s. And I think, the person who gave it to me had said that back tested, and this was back in like 2015, 16, back tested, it had produced, 6 to 8% on average. And I kind of tracked it and I liked the idea of it. What ended up happening was funny, around the COVID crash, I should say, what makes this up, the permanent portfolio, is it's 25% domestic stocks, S&P 500 you could go with, 25% gold, commodity hedge, whatever you want, however you want to say it. 25% bonds. You would generally 20-year U.S. Treasuries would be like a solid, way to buy the bond quarter of it, and then 25% cash. And throughout the year, any given year, one of those or two of those asset classes are going to be up and down or whatever. And at the end of the year, what you do is, or in January, you rebalance the portfolio back into being 25, 25, 25, 25. So in January, that's where you start. The whole portfolio is 25% each. Down the end of the year, things have moved around. Maybe it's actually now 35% stocks, 20% bonds, 15% gold, and now the cash is, relative to that, would be different. And you would say, okay, however I got to slice this cat, I'm going to get this back into 25, 25, 25. So I'm going to sell some stocks and then go buy the asset class that's lower and bring them all back in balance. And you do that once a year, and you have good risk mitigation and historically good performance. Now, it was funny. Around COVID time, I was looking at this, and every single asset class was down. And I think it really kind of put a damper on the historic performance of this. And I don't know exactly where it is now, but after reading it, it was a good book because it just talked about investing in general and sort of understanding the markets and what have you. It's an approach, but there are other all-weather portfolio approaches out there. I feel like there's one called the butterfly portfolio that someone told me about. But these are essentially portfolios that are simpler, that have diversification, they have an eye towards capital preservation, and still also having a good return. So it's something to consider. I would recommend that book. I don't know where the actual backdated performance of the permanent portfolio is right now. Obviously, in any given year, it might be different, but worth a read for sure. And maybe it's the kind of portfolio for you. Oh, here we go, golden butterfly. Okay, so that's the permanent portfolio method. Probably not like one of the most common, but it's in my list.